I'm Kathy Becker. I'm the Responsible Finance Campaign Director at Green America. And with us, we have Todd Larson, who is our Campaigns Director at Green America, our Corporate and Campaigns Director, Michael Richardson, and Liz Evans from Third Act Upstate New York. And we're very happy to have them to help out with this webinar as well. So next slide, please. Okay, so this is actually, I said webinar, this isn't a webinar, this is a normal Zoom meeting format where we're all in one big room. When we had first put this out there, we really didn't expect it to be that big, but lots and lots of people registered, so we just wanted to go over a few meeting tips since we're all in the same room, and it seems like everybody's basically doing it. Just to keep yourself muted if you're not speaking. And we may have to mute if a line's noisy and you don't realize that you're not muted. For example, we might have to mute you if that happens. We do have a short presentation for about 20 minutes, just going over what's happening with the insurance industry. So feel free to put any questions or comments in the chat during that. And then we will be going into breakout rooms later on. And so during the breakout rooms, you can unmute to speak. Just sort of be conscious of taking space and making space and keeping your comments short. We have some discussion questions, hopefully to bring out what your issues are, what's happening with insurance for you, and just generally being flexible and as the conversation moves on. Okay, next slide, please. So on this agenda, I'm going to talk about climate change and its impacts on property insurance. Then Michael's going to talk about how insurance companies, the big ones, are insuring and investing in fossil fuels. And then Todd's going to talk about how to shop for and find climate smart insurance. Then we're going to go into our breakout rooms where we can hear from you. And we also have a pledge to switch to climate smart insurance. So next slide, please. And that pledge is right here. This is what it looks like, and I'm going to put a link in the chat. And so we do hope you'll consider taking this pledge if you haven't already. It just sort of helps, formulate a commitment that you actually do want to look into, because, it's kind of a pain to look into this stuff and shop for this stuff. So it makes an intention for yourself that you're actually going to do that. And sometimes that, helps people actually follow through. All right, next slide. All right, so just moving into the first part of this meeting, this web meeting with our presentation time on insurance on the front lines and how climate change is affecting insurance. And so next slide, please. So I'm sure, as you know, NOAA has this billion-dollar weather and climate disaster site, which actually the Trump administration has discontinued, but it did run through 2024. And in that year, there were 27 natural disasters costing $1 billion or more, totaling $187 billion. And that actually does not count the fires in California, which were in January 2025, or the major flash floods in Texas. That was this year as well. But total since 1980, there have been 403 of those, and the frequency just steadily goes up through those decades. It was like 3 a year in the 1980s, and now it's 27, 28. The total cost since then is almost $3 trillion, and there has also been almost 17,000 deaths due to this since 1980. Next slide, please. So in response, the big insurance companies they're taking a very short-term view of this. So one thing they're doing is simply not renewing policies in climate vulnerable spaces. And you can see this is a map from the Senate Banking Committee led by then Chair Sheldon Whitehouse, a report that they issued. And this is by county, and you can see that the non-renewal rates are going way up along the coast, California, Florida, but also in the middle of the country, like Oklahoma, Nebraska, where there's a lot of tornadoes or a lot of windstorms, Iowa. So it is definitely not just the coast. It is really nationwide. Next slide. And then we have insurance companies that are not paying claims. So people are filing claims, and of course, sometimes there are bogus claims. People file claims and they really shouldn't be paid. Like there's really nothing to them, but that's few. That's very much the minority of claims. There are insurance companies that are not paying 40, 50% of the claims that are filed with them. And you can see those, the top 14 of those listed here from Weiss Ratings is where we got this. And in the slides, which you'll get, these are linked, and Weiss has another PDF of about 200 insurance companies and what their non-payment of claims rate is. But you want to know if an insurance company is not paying its claims, you probably don't want to go with that company. And you can see here, Allstate, USAA are really high on that list. And then next slide, please. And then finally, they're doing this across the country. They are raising rates. And so LendingTree has a report about insurance rate, like basically your annual premium, the rate of how that's gone up for the last 6 years and which states are the highest. So it's gone up about 40.4% average nationwide, but some states are much higher. So the highest ones, Colorado, Nebraska, and Utah, saw rises during that time of over 70%. The smallest were Vermont, Alaska, and Maine, around 11% for those, but it's up in every state. No state did insurance premiums fall. And next slide. So here's where I'm going to hand it off to Michael.
Well, Kathy, when I first got into this, I thought insurance was a pretty simple thing. I had no idea that they were involved in pumping money into
I
the
like those.
pipeline to fossil fuel projects. And it just left me confused because I thought it was really simple. I paid my premium, you paid your premium, and then when Todd had an accident, we paid his claim. And I had no idea that they were taking those premium dollars. They weren't just sitting there waiting to pay Todd's claim. They were using that for a purpose, and it happens to be a purpose that just does not align with my values. So let's take a look at this. Let's take a look at the next slide, 11. So what we have here is what they're doing. Uh, Insurance companies, certainly what they do is they insure things, right? So if a oil company wants to build a new pipeline or a refinery or buy a tanker or whatever they want to do, they really don't use their own money. They go and try to get capital from other places. And as it shows you on this slide, they get it from banks, investors, and maybe even governments through subsidies and whatnot. And so all of these lenders or investors will not give them a dime unless they have insurance. Because simply put, when something goes wrong in the fossil fuel industry, it goes wrong in a big way. Think of the BP oil platform or that oil pipeline that leaked in Kansas, or the list goes on, right? Refineries blowing up. And so for them to get money, they have to have insurance. And they go to the insurance companies. And I used to think, Kathy, that insurance companies were adverse to risk. But then I find out they actually love risk because the higher the risk, the higher the premiums. And the higher the premiums, the more money that these guys got to go out and invest and make even more money. But let's take a look at some of the bad actors that are out there. Next slide, please. So in this next slide, we're looking at the Trans Mountain Pipeline. This is one of the projects, okay? So these are tar sands up there. If you've ever seen those ads with Liberty Mutual with that emu with his head in the sand, did you know that those are tar sands? Anyhow, Liberty Mutual is one of the largest insurers of the tar sands projects up there in Edmonton, and they're building this huge pipeline to get to Vancouver to shift that stuff out to burn in wherever they burn this stuff. Let's take a look at the next slide. Now here you're seeing what's going on with the other big threat to our climate, the LNG export terminals. So look who the top insurers of those projects are. And aren't these, like some of them, household names? Some of them you maybe never heard of. But there's Liberty Mutual, there's the Hartford, there's the Travelers. I used to insure with Travelers before I found out about all this stuff. Berkshire Hathaway, those are the folks that own Geico. Did you know that that little gecko thing, he's really all covered not in marmalade jam, but he's covered in oil. Let's take a look at the next slide, 14. So this next slide, I just want to show up. Kathy put this in here because she wanted to show us what's going on with this costly coverage. So take a little look at this. Climate attributable insured losses. Now this is interesting if you look at this because their losses in this part of their business where they're insuring properties that are being damaged by climate change has a very, very close margin. And I want to take a minute just to talk about that. Imagine this again. They're taking the premiums that we pay and they're using those, of course, to pay claims. But what they're really using it for, because there's billions of dollars sitting there just waiting to pay the claims, they're investing those minute by minute, day by day into all sorts of things, disproportionately into fossil fuels. So those premiums are sitting there waiting to pay the claims. And actually, if you look at State Farm and some of them, they may have 1 year, 2 year, maybe even 3 years out of 5, where the claims are greater than the premiums. Now you think, can't run a business that way, but it doesn't matter because they're not making money off of that difference between premiums and claims. They're making money on the investments that they have by underwriting debt, making loans, and actually making raw investments. Let's take a quick look at the next slide. So in this next one, we're seeing who are the big ones that are investing in fossil fuels. When I said earlier, it's disproportional. If they were just out there investing in the breadth of the market, roughly 4% of the total investments would be in fossil fuels. But some of these companies have investments that make up on their total portfolio of loans and investments up in the 10, 12, or even 20 percentile. And the really big actors, again, are Berkshire Hathaway, Geico, State Farm, we know them, USAA, Nationwide, Allstate, Travelers, Liberty Mutual, The Hartford. And just look at the number of total investments that they have in these fossil fuel companies. See what I mean? I thought I was just buying car insurance. I had no idea that I was funding a pipeline to fossil fuel projects. Let's take a look at the next slide. Here, the reason we're showing this is that these are also some of the, as I said, the major bad actors. Liberty Mutual, 1.8 billion invested in fossil fuels. They're major insurers, so investors, 1.8 billion, but insurers, that Mountain Valley Pipeline, the multiple LNG terminals, and many North Sea oil and gas projects. Let's look at the next slide. And the next slide here, you just got to pull them out. The Oracle of Omaha, Warren Buffett. You know, you kind of think that he's a cool guy, but look at this, 46.3 billion invested in fossil fuels. They are out there shipping coal across the country. They're the largest shareholder of Chevron. And Warren has it like, oh, folks, don't worry about your grandchildren because climate should not be a factor in investor decisions. So this gives me a lot of reason to, how should I say this? I don't want to do business with these people. There's alternatives out there. We don't have to do business with these big guys that have all these commercials that we watch. There are alternatives out there. And I think Todd's going to show us how to find them.
Yeah, thank you, Michael. I can move to the next slide. So this gets to the heart of this presentation today and what we're going to all talk about in our breakout rooms, which is what can policyholders do? If you know that, you know, the big insurance companies are funding fossil fuels and a lot of them are starting to not pay out on claims and dropping policyholders at the same time, what do you do to move away from these large companies? Next slide. So you go shopping. It's very American. You go and find a better insurance company out there. Of course, shopping for insurance is not the most fun shopping experience, but it's definitely worth your while because you're going to be able to both find an insurance company that is not investing in fossil fuels or underwriting it, and you might also save some money for yourself at the same time. So it's a good idea to do it. And here's how you do it. We recommend that you call 3 independent insurance agents near you because they each work with different companies. So if you go to just one agent, you're only going to get quotes from maybe 1 or 2 companies. You need to go to more than one agent to get multiple quotes. So get quotes from local and regional insurance companies. Tell them that's what you're interested in because those are the ones who aren't investing in fossil fuels or underwriting it. The different agents do work with different companies, so make sure to shop around a bit. And one thing to keep in mind is a lot of these local and regional insurance companies have been around since the days of our grandparents. There may not be household names, but they have a very long track record and they've really been good corporate citizens. Next slide. And one of the tools you can use from Green America is our Climate Smart Insurance Directory. And we can put a link to that in the chat, but it's also in the slide. Kathy Becker, who spoke at the beginning, spent countless hours creating this directory. It's pretty amazing. You can find options in all 50 states in Puerto Rico that are not large investors in fossil fuels. So you can find both home and renters insurance and auto insurance, and that way you can bundle them together and save yourself some money. And what we did is we looked for insurance companies that are not insuring large fossil fuel projects and are not investing in large fossil fuel projects, or they have lower amounts of investments. At least they're not the major investors in fossil fuels. We also only included companies that have an A- or above rating in AM Best, because that means that these are companies that are in good financial shape, so they're able to actually pay out on claims. They have the resources to do so. And you may have seen, like in Florida, there are a bunch of smaller companies that actually didn't have the resources to pay out on claims, and now their claim holders are stuck after a big disaster. So we don't want that to happen. And also, we looked for companies that have a claim non-payment rate of less than 40%. And that's really important because, as Kathy mentioned at the beginning, sometimes people file claims that they shouldn't have. But if you're filing a claim that's an appropriate claim, it needs to get paid out on. And if you're looking at a company that is denying more than 40% of the claims that are out there, that's a red flag. So we don't want any of those in our directory. So the directory is a really good place to start so you can see what local insurance and regional insurance companies might work for you. Next. There's a few other tips here. It's always good to bundle your home insurance and your auto insurance together. You could get a discount. If it's too much money to pay for a whole year worth of insurance, most insurance companies will let you pay monthly. There are discount programs, so make sure you check for those if you're a AAA or AARP member or an alumni group member. Make sure you definitely get adequate coverage. We all own more stuff than we think. So make sure you get adequate coverage for all of your property. Make sure you get adequate coverage to rebuild your home if there's a disaster. So check that out and make sure you are fully insured. And then do keep in mind that most policies don't automatically cover earthquakes, and almost no policies cover flood by themselves. You have to separately purchase flood insurance if you'd like flood insurance. And one thing to note is if your current policy is canceled, you can ask for an extension on that cancellation and get a written explanation of this. You can also file an appeal if their explanation is not accurate. And this matters because increasingly insurance companies are canceling policies across the country. They're saying you're too high of a risk, but a lot of the reasons can be kind of bogus, so it's good to push back. And of course, in the meantime, you can look for a better insurance company. Next slide. So one of the things we're going to do now is put a poll up in the chat for folks to take. We want to get a sense of the barriers you're facing to switching insurance, other than it's not terribly fun to do. So one of them could be the financial barrier. You're worried about, can you pay the full premium up front? Are there cancellation fees on your current policy? Another could be the mortgage requirements. you do have to make sure your lender is okay with the insurance coverage you have. They do have say over that if you continue to have a mortgage. So you have to make sure that your insurance works for your lender. There could be coverage gap concerns, like you're concerned there'll be a gap between when your old policy ends and your new policy begins. There could be these underwriting challenges. Sometimes insurers can reject your application. And so you have to think about that. And then that's why you should get more than one quote, of course. There's the administrative headaches, just getting all the documents together, completing the applications, which can be multiple pages long. Increasingly, they're online, which helps. But just getting it all through all of that to make sure you've applied for the insurance. There could be an issue with your claims history, so that's slowing you down and changing. You're worried that because you filed claims, that's going to, cause you to have a really high rate quote from another insurer. And that you currently have your loyalty discounts and bundling, and you're worried about losing those, although many insurance companies do offer those discounts for bundling. So you probably will be able to get that with a new insurer. And there could be other reasons that, maybe you haven't looked around to start finding a new insurer. So you can put those reasons in the chat. And at the same time, go ahead and take the poll that we put up live. And I'll give you a moment to take that poll. Okay, and while we're completing that poll, we can go on to the next slide. So after we complete the poll, which will give us some information about why folks might not want to change, which is helpful for the discussion, we're going to go into our breakout rooms. So we're going to break into 3 rooms. Kathy, Michael, and I will be in those rooms with folks. And we're going to be looking at some questions that are common to insurance and how we all have insurance currently and where we'd like to go. So we're going to be looking at how did you end up with the insurance company you have now? What scares you most about changing property insurance? And has anyone changed their insurance providers recently, and how did that go? So that can help to make our discussion happen amongst all of us. And each of us will be taking some brief notes just of themes that come out. And then after we have our breakout rooms and share and learn from each other about switching insurance, we're going to all gather back together and share some learnings from that experience.